In this video, I will be covering insurance topics. What is the meaning of insurance, types of insurance, principles of insurance, difference between life insurance and general insurance, types of life insurance and types of general insurance. First, I explained you what is the meaning of insurance. Insurance, an arrangement by which a company or the state undertakes to provide a guarantee of compensation for loss or damage, illness, or death in return for payment of a specified premium. There are two types of insurance. First is life insurance and the other is general insurance or non-life insurance. Now I all explained you principles of insurance. First principle is principle of utmost good faith. According to this principle, the insurance contract must be signed by both the parties, that is, insurer and insured, in an absolute good faith or belief or trust. They should not hide anything from each other. The second principle is principle of insurable interest. The principle of insurable interest states that the person getting insured must have insurable interest in the object of insurance. That means you cannot get the insurance policy for the neighbor's car or for neighbor's kid. You shall have the insurable interest in the property or the person where you are invested taking the insurance plan. The third insurance principle is principle of indemnity. According to the principle of indemnity, an insurance contract is signed only for getting protection against unpredicted financial losses arising due to future uncertainties. That means that the role of the insurer is to provide the good to the loss happened. The next principle is a principle of contribution. It applies to all contracts of indemnity. If the insured has taken out more than one policy on the same subject matter, according to this principle, the insured can claim the compensation only to the extent of actual loss, either from all insurer or from any one insurer. If one insurer pays full compensation, then that insurer can claim protection proportionate claim from other insurers. So, for example, if your car has 1 lakh rupees of principle of indemnity, then you can take maximum up to that amount. The fifth principle is a principle of subrogation. According to the principle of subrogation, when the insured is compensated for the losses due to damage to his insured property, then the ownership rights of such property shifts to the insurer. Next principle number is principle of loss minimization. According to the principle of loss minimization, insured must always try his best to minimize the loss of his insured property. In case of certain events like a fire breakout, blast, etc., you shall call the insured person or shall call to police or the fire brigade, and he should put all his efforts to minimize the loss to the product or the property. And the next and the last principle is principle nearest cause. Proximate cause is concerned with how the actual peril of loss or damage happened to insured party, and whether it is a result of an insured peril. It looks for what is the reason behind the loss, is that is an insured peril or not. Now I explained you difference between life insurance and general insurance. Life insurance is an insurance contract which covers the life risk of the person insured, whereas the general insurance is anything which is not covered under life insurance, like motor, house, health, etc. They are general insurance. Life insurance is a form of investment, whereas general insurance is only a contract of indemnity. Life insurance is for short or long term, whereas general insurance is a short term for say for 2 months, 3 months, 1 year, 2 years or 3 years. In the life insurance, premium has to be paid over the year. However, in general insurance, premium has to be paid on lump sum. A life insurance amount is paid either on the occurrence of the event or on maturity. Whereas in the general insurance, losses reimbursed or liability will be repaid on the occurrence of uncertain events. In the life insurance must be present, the insurable interest must be present at the time of contract. Whereas in general insurance, the interest must be present at the time of his or her contract as well as at the time of loss and at the last day's policy value. Life insurance on the premium. Life insurance, it can be done for any value based on the premium. Whereas in the general insurance, the amount payable under the insurance contract is to the actual loss suffered. So the maximum amount you get is the loss happened. Now types of life insurance. First is term insurance. It is the pure insurance form. It pays your nominee. It is a sum insured in case of your demise. Within the policy term, it does not have any sum assured or maturity amount. Premium is very low. Second is endowment plan. These are insurance and investment plan. A certain portion of the premium is paid for protection of the life and rest amount is invested in life risk. So at the time of maturity, the insured person gets a predefined amount. Third is unit linked insurance plans. These are newly introduced plans. A couple of decades ago they were launched. You offer life protection as well as the opportunity for capital appreciation by investing in various funds of varying degrees of risk, just like endowment policy. In this plan, a certain portion of the premium providing life cover, they generally invest in the equity market. Therefore, the return is not predefined. It depends on the market return. It has certain lock-in period, say 3 years, 5 years. Up to that time, you cannot withdraw the insurance. Now I explained you the general insurance types. Of general insurance, the first and the important is health insurance. A general health insurance plan is an indemnity plan that pays for hospitalization expenses up to the maximum of sum insured. In this, you can opt for individual plan or family floater plan. In family floater plan, provides coverage to all the members of your family. Young Star Insurance, if your age is in between 18 to 40, you can opt for this plan. It is applicable for individual and family. Senior Citizen Plan, if your age is in between 60 to 74, you are eligible for opt for this plan under some terms and conditions. Cardiac care plan, if you are suffering heart diseases, you are eligible for opt to this plan under some terms and conditions. Next is motor insurance. Motor insurance covers your vehicle against accident damage, theft, vandalism, and so on. Then the home insurance, your home insurance policy protects your home and its belongings from the damage suffered due to man-made or natural disasters. Other important general insurance policy is the travel insurance policy. A travel insurance policy is you against losses suffered due to loss of damage, beget delays in flights and trips cancellation. When you are traveling abroad, in some cases, if you are hospitalized while traveling, our travel insurance may also offer cashless hospitalization. I am Dattatreya, who is explained in this video. I request you to subscribe, like and share to maximum is appreciated. Please click on subscription button and to receive regular notification. Thanks for watching.